back. Asia's wealthy are playing it safe these days with their cash, avoiding exotic investments such as derivatives and hedge funds. DBS says that's making it hard for private banks to make money. And Josie Ling is here for more from Singapore and the woes of the private bank. Josie, I feel sorry for them, almost.
Almost, I think, is the word. Oh, Susan called the story once bitten, twice shy. We have wealthy people in Asia now sticking to just plain vanilla investments like stocks and bonds after being burned by derivatives in the credit crisis. Now, the Singapore private banking head at DBS Group says that it scares him that clients' investment activities are like those done in the late 80s and 90s, going back in time. The only difference is, and it's his problem, is that profit margins are much thinner today on stock and bond transactions. Now, derivatives like collateralized debt obligations, we haven't heard that word for a long time, and other structured products blew up when credit markets seized up globally. That also actually triggered Lehman Brothers' demise. These often highly leveraged and also toxic instruments, Susan, blasted big holes in rich people's portfolios. A case in point is Singapore billionaire Oi Hong Leong, who is suing Citi Private Bank for over $1 billion losses in currency and also bond options. Now, for Singapore's DBS, there's actually benefits as well in the fallout, Susan, and that's the migration of clients from foreign banks bailed out by governments or weakened by credit market losses, so they're leaving those banks. The DBS banker didn't say who those names were, but if you think about government bailouts, you think about companies like Citigroup, and in terms of being smashed by credit market losses, a name like UBS comes to mind. Susan.
Well, did DBS say when investor appetite might return?
Looking tough at the moment. What we're hearing from PricewaterhouseCoopers, Susan, is that private banking industry profit margins are now so negligible compared with 30 to 40% prior the credit crisis. So it's really tough times for the private bank. But the PwC's head of private banking business do see risk appetite returning. He says that in the past month, banks have been telling him that clients are again talking about buying structured products. That, though, frightens the PwC consultant, like, don't people ever learn? But I guess it is good news for banks, Susan.
Okay.